The year 2024 kicked off with a frenzy. Crypto was everywhere, and everyone wanted in. Bitcoin shattered the $100,000 mark, igniting a digital gold rush. The SEC approved Bitcoin ETFs, making it easier than ever for big money to flood in. Companies like MicroStrategy snapped up Bitcoin, fueling the hype. The presidential election handed Trump a win, and his pro-crypto stance sent markets soaring. Whispers of a Bitcoin strategic reserve and Fed rate cuts made traditional savings look dull. Suddenly, crypto felt like the only game in town. The message was clear: get in now, or miss out forever. Everyone felt like a genius, until the floor started to creak. The party was wild, but no one noticed the warning signs. But when things seem too good to be true, they usually are. Regulators stayed vague, leaving investors anxious about sudden rule changes. Major exchanges like Binance faced lawsuits, while others like eToro fled the US, pushing users onto sketchy platforms. Hackers pounced, stealing over $2 billion in 2024 alone. North Korean groups led the charge. High-profile hacks like DMM Bitcoin and WazirX made fortunes vanish overnight. Fear spread fast. Regulatory chaos, exchange failures, and rampant crime spooked everyone. Investors who once bragged about their gains now panicked. The herd mentality flipped. Everyone rushed for the exits. The stampede was on, and nothing would be spared. The crypto utopia was cracking. Then, the crash hit, fast and brutal. Billions evaporated overnight. Dreams of easy money turned to nightmares. Major exchanges like Coinbase and Kraken buckled under the panic, freezing trades and trapping investors. Even stablecoins lost their peg, shattering any sense of safety. Altcoins like Polygon and Celestia bled out, losing half their value or more. Investors scrambled to salvage what they could, but most were left with nothing. The human toll was devastating. Life savings, homes, and futures wiped out. Shame and regret replaced euphoria. The 2024 crypto crash was a personal tragedy for millions. As markets collapsed, the courts got busy. Sam Bankman-Fried of FTX was sentenced to 25 years for fraud, exposing crypto's dark side. Binance's Changpeng Zhao landed in prison and paid billions in fines for lax compliance. Telegram's Pavel Durov was arrested for enabling crypto crime, and Do Kwon faced extradition for the Terra Luna collapse. These cases shattered trust in the industry's biggest names. Meanwhile, scams exploded. Pig butchering, phishing, and fake platforms preyed on desperate investors. The crash revealed a lawless frontier where predators thrived. For many, the pain wasn't just financial, it was criminal. The reckoning had arrived. In the aftermath, Washington finally woke up. Emergency meetings and calls for strict regulation echoed through D.C. The SEC and CFTC pushed for tighter rules, aiming to rein in the chaos. The future of crypto now hangs between innovation and regulation. Some hope the crash will clear out the scams, making way for real progress. Europe's MiCA rules may set the standard, but uncertainty reigns. The lesson? Hype and weak oversight breed disaster. Crypto's future is uncertain. It could revolutionize finance or fade into history. For now, the party's over, and the cleanup has begun. Only time will tell what's next for digital assets.